All right, y'all, back to work. Hope you guys had a restful weekend. Got Fed week ahead of us this week and a bunch of money to make this week. But I'll tell you, there's one big clue on the charts right now. It's almost hiding right in plain sight, right in front of us right now on these charts. This one clue is probably going to unlock our money-making trades for tomorrow and possibly the rest of the week this week. I'm going to talk about what that big clue is, why it's important, and most importantly, how we can put a game plan together to make some money off that big clue, which is just hiding right in plain sight right now. So charts are ready. Enough of the intro. As always, thanks for tuning in and supporting the channel. Let's roll those sleeves up now and go have another fantastic week ahead of us. S&P SPYs ready to go tonight. NASDAQ triple Qs are all ready. I have three very simple but important clues on these charts right now that are telling us where I think the winning trades are waiting for tomorrow. One of those three clues is right here on these hourly time frames. It's easy to see right now we are bullish overall on the S&P SPY, bullish overall here, the NASDAQ, and the triple Q. So one of three big clues that are tipping us off to where the money is tomorrow. We're a bullish overall bias. I like to use this hourly chart as an overall directional bias. The second clue, though, is over on the calendar for tomorrow. We don't have any major news tomorrow, but one very big clue is the lack of news until we get to the FOMC announcement coming out on Wednesday afternoon. So we know right now the markets are probably looking down the road at the FOMC announcement, wondering, will they cut rates? Will they give us guidance for the next rate cut coming on down later on in the year this year? So that's a big clue for me. Markets may be waiting patiently for the FOMC announcement coming on Wednesday. And the final clue is down on some tick charts. You know, we don't trade time charts in our trade room. I like to use this hourly chart as an overall directional filter, but we like to use tick charts in our trade room. All the time frames, by the way, in case you're watching for the first time tonight, that is a 7,000 tick chart, and that yellow line right there, that is the only indicator we need to find lots of winning trades each week. That, my friends, is the 21 EMA. I mentioned there's one big clue that is kind of staring us right in the face, hiding right in plain sight right now. It's right here on the tick charts. We have a situation right now where we have a big move up, a big move back down, a big move up, a big move back down. Whenever we see these big moves back and forth like this, it usually means there's a range coming here soon. Now that would make perfect sense because we know we have the FOMC announcement coming on Wednesday. Why is this important? Well, because if you've taken my free trading classes, you know that ranges love to rotate. So we may not know exactly where that range exactly is right now, but I would anticipate there's some range right in the middle right here, and that range is going to want to rotate back and forth. Now, when you think about this, we're a bullish market into a trading range. There are basically two ways to make money consistently with a situation like this. One of them is a bear trap, buying bear traps off support levels below. I have three different types of bear traps because we never know exactly what we're going to get ahead of time. So I'm going to cover over three different variations of bear traps. We'll talk about that as we go deeper. But another trade for tomorrow will be a breakout pullback, right? A breakout and a pullback. Now, there are four different ways in which we can trade a breakout pullback. So we have a lot to cover in what really set the tone for the rest of the week this week. I want to talk about the breakout pullback a bit later. Let's talk about my favorite trade for tomorrow. My favorite trade for tomorrow is a bear trap down here. I would love to look for a bear trap down here. Let the bears pull back. Let them try once. Let them try twice. Now, why twice? Because now, once I've got that higher high and bears have tried twice, now I know where their stops are. And if you're caught short, you get stopped out of a short trade. What happens? You have to buy your way out of that short position. In our trade room, I love to look for, during range markets like this, I love to look for these bear traps and then add to my winner. Now, guys, the easiest way to make more money in trading is to add to your winning trades. Very simple way to add to my winner. First things first, a shallow pullback and a higher high in price. We saw one right there, right? We go up, shallow pullback, higher high in price, and what happens? We go right below that low. That is an add-on trade like I teach in our free trading classes. So as we go higher, shallow pullback, higher high in price, and we'll get that add-on as we go higher. So again, it's basically a bear trap down here. Trap those bears in, let them try twice. We're not picking tops and bottoms. We're not going to pick that bottom blindly. We'll trap the bears in, squeeze those stops, and again, add to that winner as we try to rotate back to the other side of that trading range. Now, here's a question. I love the idea of the bear trap down here, but what if we don't get it? I mean, let's face it, we've been on a big winning streak the last couple of weeks here, so we may go lower, and there might be so many buyers down here, we may not get a 1-2. It may just whoop and run right back up in what we assume is a big range waiting up overhead. If all I get is a V bottom in these scenarios, although it's my favorite scenario, I have to make do with what I've got. If we V bottom and we start grinding back up into that range, I'm going to make a small adjustment. I'm going to draw a trend line off the highs. I'm going to bring that trend line down around that low. I'm going to find that new bull channel. Now, here's the magic happens. Look left, find one of these prior swing lows that lines up right around the low of that channel. I'll tell you, there's not a lot of guarantees in trading, but that's about as close to guaranteed winner as you're going to get. Again, I would love to get a bear trap down here, but if all we get is a V bottom off this low and it starts to grind, the key here is it will pop back up and start grinding higher. Once it grinds higher like that, just find that new channel off the high, mark that low. And guys, any of the entry patterns you guys are learning in our free trading classes can be applied. It could be a bear trap. It could be an add-on off of that low. You'll see lots of examples of stuff inside the free video class. And there's one more variation. I mentioned earlier, there are 3 different kind of variations of bear traps. Another variation of this, which is always one of our favorites, is called a retest trade. So, for example, oftentimes we'll get that nice strong move lower. We'll get a beautiful bear trap winner, 1 and 2. What I always do is I always go for a 1-to-1 first target. So the size of my stop is the size of that first target. I move that stop up to my point of entry to lock out any risk. We talk about this a lot in our free trading classes, right? So oftentimes what happens is we'll get a winning bear trap like this, but every once in a while, though, the bears are hunting for another leg lower. We'll make that nice strong run down. Now, once we retest that low, think of it this way. Anybody who sells up here, they become buyers. They take their profit down here. So question for you, is this a good place to sell? Not in an overall bull market, like we saw earlier on the hourly time frame, and not with a big range as a magnet up above us. We love these retest trades in our trade room because this is a second chance here, another bite at the bear trap apple. Once again, we're not going to pick a bottom on this. I'll let bears try once, let them try twice, squeeze those stops, buy right into those stop losses. And again, if you want to make more money, don't trade more often, just add to your winning positions. I always like to go half off and add a quarter on back around that add-on trade. So those are 3 variations of bear traps if we go lower. But we may not go lower. This thing may start ripping going higher. We've heard from Trump at the White House. We should have a trade deal coming here soon. So I want to talk about going higher here and 4 trades going higher here in a moment. Before we do that, though, let's slow down for a second because I know most guys watching right now, you know these patterns already. Most of you guys watching, you're already making money with these entry patterns. But if you're here for the first time tonight, this might be a brand new strategy for you. Don't you worry though, I teach this entire system. In fact, I have a ton of examples, trade examples of bear traps, add-ons, range rotation. Guys, I teach all of this with a ton of trade examples in my free trading classes. So what I'll do is I'll put a link up top here for you, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video course, we'll teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each morning. More importantly though, guys, I want to help you time better entries with this stuff. I'll teach you 4 my favorite entry setups. Guys, the markets are way too good right now not to be making consistent profits. So if you're missing the best entries right now, if you've lost your confidence in your current trading strategy, what are you waiting for? Hit that link that popped up there. Watch and take that free trading course. Everyone loves all the trade examples I include in that short video series. I have a ton of examples, bear traps, bull traps, add-on trades, all included in that free course. And best part is it's completely 100% free for you. Also be aware too, guys, I'm going to put all the important links you'll need, especially for all the first timers who are tuning in for the first time tonight. I'll put all the important links you need down below the video, the description. Again, start first on the free trading classes. Most folks start making money all on their own, all from that free video course. So start there first. Learn how to time these entries better, start making money on your own. And don't forget too, I post a lot of charts and videos and mindset stuff on Twitter, or X as they call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need to learn the strategy, time better entries, get more confidence in your trading, hopefully make a lot more money because of it. I'll put all the stuff linked up in the description of this YouTube video. Okay, so where did we leave off now? We've talked about how we got big move, big move, big move, big move. There probably is a range hidden here somewhere. We talked about some bear traps, right? Buying some bear traps off the low of that range. I love those for tomorrow. But what if we start going higher here right now? Could I buy it as we go higher? Can I sell it as we go higher here? Let's talk about that right now over on the NASDAQ. NASDAQ's getting lonely over here. I'm with you here, NASDAQ. And you can see right away, I like to use the hourly time frame as an overall direction. You could definitely see that overall bullish direction right now here on the NASDAQ. And again, we're not going to trade off time charts. We'll drill down to our tick charts here in just a few moments. But before we do that though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos every evening. So thank you so much for all the likes, all the subs, all the ongoing support down in the comment section down below. So thank you so much for all the ongoing support. And I promise I'm done begging for likes and subs. Let's now dive in here and talk about our tick charts. Again, if you're a student of mine, we talk about this stuff a lot in my trade room, kind of a hidden clue, right? Kind of a big hidden clue hiding right in plain sight right now. Big move up, big move down, big move up, big move down. Again, imagine now one big range. And again, that range is going to want to rotate, right? It'll want to rotate back and forth. So we know that underneath this range is where my favorite trades are going to be for tomorrow. We talked about 3 different bear traps we mentioned earlier in this video tonight. But what if we go higher here, right? What if we start going higher here up overhead? I mentioned earlier that when you have a bull range like this, right? Assume this is basically one big range. It's a bullish market into a range. I can buy bear traps underneath, and I can buy breakout pullbacks, right? Breakout pullbacks up overhead. And I mentioned earlier, there are 4 different types of breakout pullbacks that we can look for. So let's talk about that. Now, first of all, as we start rotating back to the high of that range, do you recall that add-on trade I pointed out earlier on the S&P, this one right there also on the NASDAQ? Again, what's an add-on trade? It's basically a bear trap like I teach in our free trading classes. So we expect this market now is going to want to rotate back up around that big high up overhead. On the way up to that area, the most aggressive trade I know for tomorrow is going to be jumping in on that add-on trade. Now remember, add-on trades, the key here is that pullback right there, it needs to separate off the moving average. separation equals strength. Separation off the moving average. This is why I like to use the 21 EMA only. I'm not cluttering up these charts with all kinds of different moving averages because the one I care about most is the 21 EMA. So shallow pullback, that gives me separation. That sets the trade up. Now the higher high confirms that lower low, or that low is now ripe for basically, it's a technical bear trap. Like I teach in our video classes, we call these add-on trades, where we run lower, we trap the bears in, we squeeze those stops, and once we start seeing those higher highs in price, that separation, we add from there. The exact same game plan I mentioned earlier on this video. But again, this will be the more aggressive, right? More aggressive because you're kind of right in the middle of what would be that overall range there. Let's now talk about 3 different ways in which we can now buy a breakout pullback. One way in which I can buy a breakout pullback is with a strong run up, and then we basically start watching prior highs. We look for ways to buy a 2-legged pullback. Now, 2-legged pullbacks are kind of the classic traditional way to buy a breakout pullback. No matter where that range is, if we see a very strong rotation off the high, if we see this thing really punch its way through these highs here, remember, a lot going on right now with trade talks in the background. It seems like there could be any day right now, we might wake up and have a dozen different trade deals lined up on the president's desk in the Oval Office. So we do want to be prepared for a really strong run higher. So if we do see that strong run going higher, I don't want to buy high. I want to buy nice and low. And usually what that means is a 2-legged pullback. Again, this is kind of a classic traditional breakout pullback. 2-legged pullback, 1 leg and 2 leg. Now think about a 2-legged move, right? A measured move, A, B, C, D. And ideally I want to combine that 2-legged pullback with one of these prior highs. It could be any one of those prior highs. That's the key. Now, in all reality, my favorite 2-legged pullbacks, they go a little bit more, a bit more than a measured move. Think about 130, 140, 150% down here. So once we get around these key levels of support now we have all of that momentum for the buyers, and now we look for that same bear trap into add-on combination. Bears once, bears twice. Please remember, it's always a higher high. It's always a higher high. Why higher high? Because sellers want to sell high. I want to trap those bears in. Then I know where their pain is, and I can buy into those stop losses. Now remember, as we go higher here, keep your eyes open for, what was it again? That separation, that higher high in price, and I want that pullback right below that low. Again, a lot of examples of these the past couple days here. 1 try, 2 try, add to our winner, 1 try, 2 try, add to our winner, get some key levels overhead here, 2040.02, right, 2040.95, key levels we've been tracking on the hourly time frame for the past few months now. Let's talk about another variation of a breakout pullback. Again, as we rotate higher, don't be afraid to jump in on that add-on trade as we go higher. But you know what though? Something that happens is sometimes we see a breakout that begins to grind going higher. I mentioned earlier that anytime we see a market grind, what does a grinding market do? Well, it's a very good clue. Anytime we see a grinding trend is like a freight train. Whenever we see a market pop up and start grinding, again, it will usually separate or hold just above that 21 EMA. The minute I see things start to grind up like that, grinding markets are very strong trends. And because of that, I can be a bit more aggressive on the entry. What I mean by that is now I can draw a trend line off the highs. I can bring that trend line now down around those lows. That creates that channel. I would still love a 2-legged pullback, but I don't need the 2-legged pullback as much in this scenario. I want to buy, as always, find those prior swings. And again, I want to get a bear trap, a technical bear trap below prior swings. I also want to get below that 21 EMA. Look for a 2 try bear trap, 1 and 2. Now, one cool thing, very important, one cool thing about these, we call these pop and grind breakouts like this, is the pop leg. The pop leg in a pop and grind scenario like this is always a measuring leg. Now, why would that be important? Well, because another way to make more money in trading is to hold your winners longer. So once I know how big that pop leg is, and obviously I can't tell you exactly how big it will be right now, but this is the idea behind it, right? This is the strategy behind it. Once I know how big that pop leg is, I then know how big then I know the target will be, right? So measuring leg, pop leg is a measuring leg. Once I know how deep that pullback is, now I know where that final target will be. So now as I go for my bear trap off of that low, as I add to my winner now with my typical add-on trade, shallow pullback, higher high in price, and in below that low, now I know where that final target will go and where to let my winners run. You know, one easy way to make more money is get better at letting your winners run. Letting winners run sounds easy, but it's much easier if you have the confidence to know where that market's trying to go. That pop leg being the breakout leg is an easy way to do that. You pin it off that low, and that will tell you where to take that final profit target and let that winner run. A third variation of this, or I guess fourth variation of this, at this point, is a pop into a range again. So oftentimes, especially right now, we're seeing a lot of this right now. We're seeing a lot of these strong pops range. What would happen right now if overnight we saw a strong pop up and then went into another trading range up here somewhere? What would that tell us? Well, first of all, again, what do ranges do? Ranges love to rotate, right? Back and forth. And because we're overall bullish, we know the best entries are usually going to be a bear trap below that trading range. And what else? A breakout pullback above it, right? Now, knowing that kind of sequence there, you can kind of see how to trade stuff like this, right? I love to look for, again, if we're in a range tomorrow, find a trend line off those lows. Find channels off the high, off that low, right? Find a key level of support down there. Maybe it's that trend line off that high right there, but find a key level of support underneath that range and look for that classic bear trap pattern. The cool part about ranges, though, is the amount below the range, the amount above the range. Just like that pop leg is the measuring leg, we can measure the amount below the range, project that above the range, and that will tell me now, as we're going higher, I can add to my winner. As you can see, the bear trap and the add-on technique will be used in lots of different ways based on the market conditions or the market structure. In this one, this would be a bullish range market structure. So we look for the bear trap below that low, 2 tries right off the moving average, and we add to our winner here. We now know where that final target is going to go. And again, if I see a market now really break through that high right now, for example, right, let's say we get a range up there. We may get that range up there. We may rotate lower here, bear trap, and really, really punch through that pendulum swing. Once I see a convincing break of that pendulum swing, then I begin looking for a breakout pullback. Breakout pullbacks could be either a 2-legged pullback. Again, think about a measured move, right? A measured move that's gone a bit too far. We mentioned that earlier in this lesson, the NASDAQ tonight. Or also, too, oftentimes we'll rotate and grind off of that low. If it grinds like that, we look for that breakout pullback, right? That grinding breakout pullback going higher there. So 2 ways to trade that off a bullish range. Now, let's kick this up one more notch here and see if you're paying attention right now. So again, another scenario now would be, let's say now we pop up in a range up here, but now we go higher first. Now, this is where things get tricky, because if we can't see separation and continuation, the giveaway for a range breakout, is always either a break of a pendulum swing, right? Or it pops and separates and grinds out of that range. If we get one of those, then yes, a breakout pullback is very likely here. But oftentimes what happens in these cases though is we go up into a range, we try to go higher, but then we wind up failing and running back down again. I'm going to warn you right now, this will feel like a reversal. It will feel like this is a full bearish reversal. And that's a good thing, because that's going to fool a lot of rookies who don't know how to read a chart yet. This is not a reversal. It's a rotation. Again, ranges love to rotate. So while all the rookies chase this thing lower, you are no longer the victim of this bear trap. You're the one now doing the bear trapping. Let those bears try once, let them try twice, and squeeze those stops running higher. These rotation trades are some of our favorite trades in our trade room. Time those correctly, they are an easy way to make a lot of money in a very short period of time. So that is one more variation. If we do run higher and get stuck up there in another trading range, that range becomes a magnet. I'm trying to buy those bear traps below that range. Don't fall for that fake out, break it off the high. Do not fall for that. It will feel very scary. But as always, our biggest winners are usually always the scariest ones. All right, guys, that's our game plan for tomorrow. I would love to get those bear traps going lower, but if we don't, I'll be watching for those add-ons, those breakout pullbacks, and we'll do it together tomorrow morning in our trade room. Now, speaking of our trade room, tomorrow morning, guys, the place to be is in the trade room, 8 o'clock Eastern time. I know there's a lot to learn as a new trader, but we do it together every morning in real time at the opening bell. Guys, again, I'll put all the important links you'll need to learn the strategy. I'll put everything down in the description of the YouTube video. Start first on the free video classes. Enjoy the trade examples there. Then come join me in my trade room, and we'll do it together every morning at the opening bell. In the meantime, guys, hope you learned a bunch this afternoon. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.